Hey guys, today we're going to be discussing whether or not there is a black swan event looming in the market. Right now we're looking at SPY, which is the index fund for the S&P 500. This is the daily chart right here. I'm going to kind of break down why I think there's a good possibility that we see significant downside over the next 6 months, and that I think you could short against recent highs here. So what we have on this daily chart is pretty interesting. We've got this kind of 5 waves move up from these March lows, and then we had a long-term flat ABC wave, and then we pushed higher, and we actually broke out of this range, meaning we should have probably seen another 5 waves up similar to this. The interesting part about this, though, is we broke out here above these highs, and then we actually slid back below them right here, as you can see with these 2 candles. Now, this is telling because we found heavy supply at this gap supply left here when this whole thing started. So so far we've rejected, and then we've actually slid back below this breakout level. Now what this is telling you is that there's a lot of overhead supply at these levels, and that most likely you're probably going to get some short-term downside, or possibly even long-term downside like we saw back here. What I think is possible and what we could see is we could see shorter term, if we slide back below this 3155 level, which is basically these highs here, or 315 on SPY, I think if we see below 315.5 on SPY again, we should see significant slide lower. If we hold above this level, then most likely this is just a buy the dip moment, and you can buy versus these highs here. Now what we could see would be something similar to this, and the reason I say that is because you have this long-term 38.2% Fibonacci level right here at 285. We have yet to test that level this entire rally. This rally has been completely relentless, and we have yet to get any real significant pullback. The reason I think this is a possibility is if we do slide back below this 3155 level, then that would kind of negate this as being an ABC wave here. So I think at minimum what we would see before seeing any kind of demand, if we do slide back below that 315 level, we'd probably see a 3-wave move down to about 285. That's its 38.2% retracement. There should be a lot of demand there, so it's possible even if we slide back below that, we don't get a huge market crash or anything, and we do just test this level and then bounce. So there's a couple ways to play this, and how you would go about trading this would be, as a short seller, I think you can short SPY here, and you can set a stop over its recent highs at 327. If it clears those highs, then you're probably going to get a move over 340, but to probably around the 161.8% extension of this range right here. So that would be at 338 pretty much. So you'd get a move back to about 340 before really finding any supply. So the way you could also play this, if you wanted to long it, you could look to buy here with a stop under this 319 level right here, where you have these 2 candle lows. You could look to stop under these recent lows here, and you could take a long position. I do think you can, if we hold above that 319 level, I do think you can hold a long position here. But I do think the risk reward is better shorting up here. I think what you can do is short versus the recent highs here at 327, and you would want to stop out if we see over those highs. But I do think you can get a significant move down and a 3-wave move down to about 285 at minimum. Now, longer term targets, there's 2 ways to look at this. You could look at it like how I look at it, which is that this is a long-term ABC wave, and we're going to see a measured move lower. And this is also one of the reasons that 327 level is really telling, is because, so if you take these lows at 218 here, and then these highs at 327, and then these highs at 340, if you subtract 327 from 340, you get 13, right? Now, what's interesting about this is that the long-term 50% Fibonacci retracement is basically 13 points below these lows set here. So a measured move lower, if that's something we would see, would actually give you 205 on SPY. So I think it's possible, because of how bad the economic data has been and the fact that the markets ignored it, I do think we could get a snapback to reality, and we could see significant downside over the next coming months. to around this 205 level, and I think that would shake a lot of people out of the market, and I think that would be a really unexpected thing to see. So I think there's a strong possibility we see this case unfold, but there's also another way you could look at it. Instead of taking a downside view, you could look at it as that this is just one big consolidation range here, and we have yet to complete our bull cycle, even though we're seeing, minus 5% global GDP contraction and, unemployment is through the roof. If you take that view, then you'd probably be wanting to look for the 161.8% extension of this range here, which it doesn't show on the chart because, well, I can't zoom out on TradingView, but that sits at around 4,000. It's about 4,100 is where that's sitting. So as a bull, you could expect to move to about the 161.8% extension of this recent consolidation range, which is around 4,100. So if you're looking to buy and you want to long the market, I would say at minimum you want to wait until we get a back test of this 285 level. I do think that's somewhat inevitable if we do slide here, and we kind of break this longer term trend line, and then we break this this demand zone right here. If we break below 315, that's your signal to get out of the market and look for a place to buy, because the floor can fall out very fast. We have the market is trading at a price to earnings ratio of almost 27 times. That's rich by any means. That's every time we've seen 27 times earnings, it's always been when we're in a bubble. And, that's exactly what we're looking at now, is a bubble. Anyways, that's my views on the market. Thank you guys so much for watching this video, and I hope you subscribe and leave a like.